It is July 28th. This is Shane Handy with the Rational Trader. Today we're gonna review how the changes that I made, or rather the enhancements I made, that incorporate volume profile, how I saw those perform relative to just sort of the normal system, and then kind of what the next steps are. And we're going to lay that out. I was supposed to have this already all laid out, but as you'll see here when I get rid of this screen, I was in the middle of testing stuff, and the change I need made the change that the programmer made that I need was not working correctly. So I got taken down that rabbit hole, trying to figure that out. So I'm not quite as organized as I'd like to be. Let's bring up this chart here. Let's get rid of this stuff here. And so just to kind of review, let's not look at Friday because Friday was pretty crazy. What we're doing here is with the volume profile. This is fine. Let's use this day. What we're doing is, I'm looking for the start of the day here. All right. So as the volume profile builds, right, these lines here are the value area high and the value area low. All right. So 70% of the trading has occurred between these two areas. Okay. The blue line is the price level at which the most trading has occurred. All right. So what I've done here is taken the machine learning system and said, okay, machine learning system, I'm only interested in areas where there has not been much trading yet. So that's a low volume node, or LVN. All right, and that's represented on screen by these red lines or orange lines. You can see it's orange here. Okay. Or when you get near a value area high or low. So those are the two places that I'm interested in. So a low volume node anywhere, or as I approach the edge of the value area from either side, either direction. Okay. Now, what I saw last week was, and I had to make some changes midweek because I had some coding issues where things weren't quite right. You'll see here now, this is correct now. Where here we've got this low volume node right here. You're well outside the volume area. I'm sorry, the value area. And all the orange bars the system is looking at to make predictions on. Right? And it's because of the proximity to that low volume node. Okay. Here, there's a low volume node right there. You just very briefly get near it, so the system will make a prediction there, one way or the other. And then here, starting right there, you've approached the edge of the value area. And so it's going to stay orange until you get too far away from it. So we're going to make predictions on all of these bars except for that one, because you poked up, you got far enough away that it says, okay, I'm not close anymore. But all through here, all of these bars we're looking for trades. Okay. In this particular case, you also have a low volume node there, so it's triggering off of both. All right. But all of these places here, we're not doing anything with. We're not looking to do anything. All right. Now, what I saw last week is that the times when, I'm sorry, there's one extra criteria I need to clarify. So there are times when you are near the edge here, but you're also really close to the point of control. The point of control is where the most of the trading has occurred, and we want to stay away from that area. All right, this is an area where things are likely to go sideways, likely chopping. And so you have to be far enough away from the point of control in order for the system to go, okay, it's legitimate. It's legitimate to take it to make a prediction here and see what the order flow looks like. All right. The reason these bars are yellow is they're basically debugging for me to see, yes, I am near the edge, the low value area, but I'm sorry, the value area low, but I'm also too close to the point of control, and because of that, I can't take trades here. This in particular. All right, so when I looked at last week's results, last week I ran this volume profile approach with the regular approach, and some days one did really well, and the other days the other one did. And what you see when you analyze it is pretty interesting, actually. We have this concept of avoiding the chop in the regular system here. All right, and that's what so the blue and the red backgrounds are related to that. All right, so you can't take trades when it looks choppy, or you can't take trades to the high side when you've got established resistance to the high side, and vice versa. So most of you know this. And what I noticed is that when I did the volume profile, I did not include this anti-chop exclusion. All right. And my thinking was that, well, by definition, I'm at a place where there hasn't been much trading, or I'm breaking out of the value area, so I'm not worried about chop. Okay, which conceptually, that sounds reasonable, but what ends up happening is something like this, where you break cleanly, okay, but then you start to build volume up here, so sort of a new profile starts to build up here, and you end up with some choppiness. And so there's a couple things there to try now. All right, it may very well be that this is just fine as it is, but it's certainly worth testing to see if I combine the two. So one of the key tests I want to perform next week, there's two of them. One of them is take the volume profile based approach and add to it the don't take trades when it's choppy. All right, so that's WDC, wave delta chop avoidance. And then see how that works. All right. And so the intention is that you would take trades just like you see here, right? But you'd probably be avoiding them here and here because this has started to go sideways now. All right, it's the kind of thing that it's not that difficult to implement, and it just needs testing. All right, so that's test number one. The second thing that's going on is this volume profile system here was run using a model that was just the normal model. Just the normal 6 o'clock to 9:30 Rev 55 all bars model. Okay. And just the way machine learning works, that doesn't seem optimal. All right, because not only am I trading the entire day here with this volume profile approach, but there's very specific areas that I'm looking at in the market, which I don't need to be modeling the other areas, basically. So there was one other observation that I neglected to mention with the volume profile system, and that is that there were late in the session some very good trades, very clean trades, where the market had been trading within the value area, basically sideways, and then it broke out, and we got clean predictions for nice trades, the kind of thing that I have no chance to get with the my current approach, which is just stopping at 9 o'clock. So seeing that plus the previous weeks, I'm much more confident that I can trade through the whole day and not get eaten alive during the doldrums if they're quiet, or and take advantage of the times when they're not, right, or when there's actually nice movement. So I really liked that. That was something that says, okay, it gave me motivation to continue doing this. If I can build the system so it better understands the structure of the market, then okay, I can trade further. The next step, so assuming that all works out, the next step is to take the volume profile concept and expand it. So we're looking at a profile that's just for the current day. All right, so it starts at when the electronic session opens, really the previous day to us humans, and then builds a profile overnight, and then by 6:30 you've got enough to work with. By cash session open in the US, you've got enough to work with, and then we start trading. There's nothing that prevents us from taking that concept and just going bigger with it. So looking at the profile for the last 5 days, the last rolling 5 days, or the last week, or the last month, and using that as there's a couple of ways to approach that. One is include it as a place to look for predictions. Require it for predictions would be another approach. The other is orthogonally use it as a way to identify areas or zones that represent where you want to be looking. So there's a lot of meat there on that bone that I haven't gotten to yet. Okay, so anyway, so this volume profile last week was run using just the normal model, which is not really optimized for these cases. All right, so if you just look on screen here, there's a whole bunch of bars here where I'm not gonna take a trade here under this definition using this system. I'm not gonna take a trade here. All right, I'm only gonna do it at these orange bars. All right. So from a machine learning perspective, the places where I'm not going to do anything, that's noise. This is noise in the system. And so it makes sense to take that out and then model without it. Okay? And so that's what I did last night, actually. Is I built a model that only included the places where I would actually take a trade using this approach. So only as you near the value area high or low, and only as you near a low volume node. Okay. But across the whole day, not just from 6:30, not just the morning session. So from U.S. session open through 20 minutes before the close, look at every single bar that is either near a low volume node or near a value area high or low, model just that, and then use that model instead of the kind of the normal one. So that's the other key test for next week. So the first one is combine. Yeah, let's write this out here. Actually, let me bring this up. So if we just under next steps, our first test is volume profile plus the chop avoidance. All right, what does that do? Okay. This is live testing, and I'll talk a bit about live versus replays in a minute. And the second is the volume profile using the low volume node and volume value area lines only. Okay, those are the two key tests that need to get done next week in live conditions, plus my normal trading. So I'll be trading live using the normal approach next week. We'll be using the 45 tick model because Friday was so volatile we crossed the threshold. All right. And then I intend to have these two tests running. One, which is volume profile with the chop avoidance in it. And the other is just the volume profile, but using a model that's optimized for that. There's really a third test that needs to be done. I don't know if we can make that work or not. What we need is both of these, right? You need volume profile plus chop avoidance using the LV and VVAL model. Okay. All right, those three things need to happen. The dilemma that I have at the moment is the replays. As soon as you put any kind of volume profile study on the chart, the replays just they're agonizingly slow. So what I'm trying to do here is get it set up so that we can watch it live, in real time throughout the week. And then if I have extra time, I'll do the normal kind of testing we do, but with just a smaller time period. So normally I wouldn't consider a result valid if it was less than 3 months of time, right? I normally take an idea and then build a model and then run that model for the next 3 months and look at the result. And that's the amount of time you need to understand if you've got something useful, because of the very random nature of the market, or rather the amount of randomness that's in the market. And so in order to get something statistically valid, you need enough data. And in the past, it's always been 3 months worth for me. That's what I've used. With the volume by price stuff here, or by adding the volume profile, the replays take so long, you can't do that. So the choices there are use less time, all right? Or what I really want to do is just write a program that'll do that for me instead of using Sierra Charts replay, all right? Writing the program I've been wanting to do that for a while, I just haven't had time. It's the kind of thing that takes a serious, dedicated effort because you can't get it wrong. Any bugs in that program will really damage you. So anyway, what we're going to do here is, stitch the two together. So volume profile approach with the chop avoidance. Okay, that's the main thing. That's going to use the same model that I run live with. Then, in a separate instance, volume profile using this without the chop avoidance. It's using an optimized machine learning model. Okay, and then this third one, I'm not sure I can get another one running. Just the way Sierra Chart seems to behave when I try to open another instance. But I'd like to get this going as well. So volume profile with the chop avoidance using the optimized model. Okay, so that's where I stand in terms of planning. Seems like extended highs and lows beyond the value area, high or low would be good points. So, all right, so let's talk about that. Larry's talking about like this spot right there. Okay. And just a moment. So the question is, what about here? All right. And sort of, that's a very traditional spot for the rational trader to look for to find the turn. Okay. It's really sort of what's on screen here is actually really useful to help explain what I'm trying to do here. So if we look at these 2 points, what you see is the market, it broke higher here and then immediately fell back. Okay. And while this was going on, this yellow line, no low volume nodes were created. All right, this is important. All right. Whereas here, we jumped up and then pulled back, and you can see right there, a low volume node gets created. So enough trading occurred up here that you now have a spot you can look at as a point from which to either look for that continuation higher, a very traditional thing to do, right? Advance, pull back, and then take the trade higher. Or we'll make that prediction, and if the order flow says that pullback it will fail, then we'll short that, looking for that move back to the value area high or all the way back to the POC. Okay. So what I'm doing is Larry, is I'm not trying to catch this point here. There's nothing. I don't have anything to work with there in terms of understanding what particular price levels have meaning to the rest of the market participants. Whereas here on the left, I do. I have that to work with. All right. So there's a particular kind of joy in picking the top. All right, but it's generally pretty painful, particularly for folks that can't handle taking lots of losses. It's not unusual to have to try a bunch of times to find that top. Okay, so one of the larger motivations behind what we're doing here is to be a little bit more. What's the term I'm looking for? I want to be choosier in where I'm entering the market. And the reason is that it's every time you take a trade, you're putting money at risk. And newer traders or traders with smaller accounts tend to not think about that. They only tend to think about the profit. But as you get more adept, you focus on the risk. And so while this looks really sweet to catch, the fact is it's really hard to catch. And if you also can't handle lots of losses because your account's really small, or you just don't have the emotional wherewithal to handle that yet, then you shouldn't try. It's a fool's game. Okay. So understanding that, this is what this is what I am aiming for. Rather than trying to pick that spot, I'll pick that one. I'll take that. If it just blasts off and keeps going, I'm going to miss that. I had my shot down here to get in, and I may or may not have, depending upon how it looked and how I've got the machine learning systems defined and set up. And if I'm in it, then I'm happy. If I'm not, then okay, I'll wait for the next trade. All right. But ultimately, what I noticed when we start taking this approach is that you have less losing trades, less max loss days, and that's kind of what I'm after here. In terms of getting choosier and what's the motivation for doing this? Okay. So that's part of the reason why I want to look at taking the chop avoidance and putting it in here also, as a way to deal with those cases where it's very common, actually, for the market to build volume in an area like right here, all right? It's built volume here, and then break out, okay, and we get our opportunity, you know, at that breakout level, at the value area edge, we get our shot at it. We may or may not get in. We may take a loss. We may not. I don't know. But then for the market to start building volume again, up above that breakout or outside of that breakout. And so if you think about that, what I've been doing is looking at this volume area and using it to help me pick places. But now a sort of a new volume area is being built. And I really need to wait for that to get built before I go, okay, now I can do something. All right. If you think that through, right? We waited a full, you know, all the overnight trading, all the after the electronic session trading occurred before it opened here, you know, at 6:30 Pacific. And now I've got a profile that I can use to work with. If I then break out of that profile and start building volume up here, I'm really sort of building a new one. All right. And so, okay, that's fine. Let it build and then do something. All right. And in fact, if you study volume profile theory, there's these days where you'll get these bimodal distributions where you get a distribution like this and another distribution up here. I mean, ultimately, we can get more sophisticated in identifying that. The point is that what I want to do is see if by putting in the chop avoidance, do I damage the good things I get by getting choosier, or is just getting choosier good enough? Okay. So that's the test I want to perform. So I'm going to get that set up for next week, and then start working on. Basically, because the replays are take so long. Once we add volume profile, I need to get it close to what I think I'm gonna end up using, and then start doing the more formal testing. And once I get there, the next step is to take that and apply it to the ES. Okay, so right behind all this, because I can tell we're getting close here to something that's really useful. Once we get this working, then we'll go after the ES, which in some ways I think it can work better because there's more volume in that market. And in other ways, it may not work as well because there's less of a range. So we got to kind of have to find that there's a sweet spot in there somewhere. All right. Okay. So Russell's concern is that, well, you know, Shane, if you're only modeling these bars, then you're cutting out the data that's part of the training, and that's not correct, Russell. So when I say I only model this bar, implicit in that statement is all of the data needed to make a prediction on that bar, which includes the previous 12 bars. So currently we take the sequence, we take the sequence of 12 bars that led to this point, and that's the data that's given to the machine learning system to model. So what's actually happening, Russ, is the way the pre-processing of the data works. Every bar is collected, and then all of the data for the previous 11 bars is appended to each bar, and then I take out just the orange bars. Okay, so I can't actually do what you're afraid of. What you're afraid of is that I'm only grabbing the orange bars and then doing my processing. That won't work, because that would connect this bar directly to that bar, and that's not what's happening. This is a time series problem. So the data that led to this point is important. Okay, and so this bar includes, when I say this bar, I mean this bar plus the previous 12 bars, okay, or 11 bars. It's 12 altogether, okay? I'm just not going to make a prediction on any of these bars. I'm using that data if it's part of a bar that I will be predicting on, okay? I hope that's clear. If it's not, Russ, just let me know. I understand your fear, though. I actually made that mistake very early on, where I was starting to get choosy about, what I was going to model, and you take this data out first, and then you build your machine learning model, and it doesn't work because you're missing this chunk of time. So the way the pre-processing works is I look at each bar and figure out what happened. Okay, so did the market go up? Did it go down? Did it go sideways? Do a lot of other processing related to just that bar for every bar, and then I do a very, very complex program that builds sort of a stack of the previous bars, and then that becomes this chunk of data that is given to the machine learning system to train on. So all of the necessary data for that bar is present in the modeling. Okay, let's see, where do we stand? This will require a change to both the custom study and to the server. Okay, so one thing that we haven't covered yet is, well, exactly sort of what's going on here when we make this prediction. My first set of tests were predict on every bar, every single one. Okay, and in other words, you're really not doing anything with the price action. You're just, if it's orange, make a prediction, and that you end up just taking. It's not smart enough in my view. All right, and so what I did last week, and that was based on the previous week's observations, is that you can't just make a prediction on every single bar that's here. You still have to look at the price action. All right, so what's going on here actually is the same set of behaviors that I look for in the normal system here. All right, I'm looking for here, but only at the orange bars. That's the difference. All right, so like if you look here, here, these bars are orange, but there's no pattern there that I have defined as a behavior to use. So I'm actually going to miss that breakout right there. All right. Actually, that's not true. There's a pullback right there. I'll end up making a prediction there on that pullback. All right. But that one, I know nothing will happen because that's not a behavior I have. So I'm also looking for, it's not just at these edges, but at these edges with the price action that I've defined as meaningful. Okay. And so that's the change that has to get made, because really what we're doing is we're using that concept of the user-defined behavior that we implemented a couple months ago, and now we've combined that with the rational trader behaviors. So the system is defining where to look, and then it's actually executing the same, it's looking for the same behaviors that are encoded in sort of the normal system. So when we get to here, it's still okay. You'll get a normal code here, a pullback code, a turn code, whatever it happens to be. Okay, and that's why you're getting a normal code instead of those user-defined codes, 199 and 299, because I'm actually executing the rational trader behaviors that we've defined. Okay. So there's a couple things that come to mind. That we didn't list here that we should in terms of testing. So if we want to talk about other tests to do here. The first is, well, can you use more aggressive codes because we're getting choosier? So that's a test that I'd want to perform. The other stuff is more difficult. This is we can do this now. We just add the codes to the list, right? Other testing is sort of new other behaviors. All right, so that I excluded initially. So when I say behavior, what I'm really talking about is price action. So this is a good example, like right here. So that's a 3-bar reversal, right? 1, 2, 3. For those of you that have been around a while, that's a 3-bar reversal, right. Come on, right. Wrong button, right there. Okay. But when you try to use just that, you end up just getting destroyed. And so in the system, I modified it to require some kind of pullback after that 3-bar reversal. All right. But it occurs to me, well, if I see this enough, I may want to go in and add that in. This particular, if there's a price action behavior that I see that I can go after now, I may go add that. That kind of enhancement or refinement is I think you're able to do now because you're getting pickier about what you're looking for. Okay. All right. So next week, normal model, but volume profile with the chop avoidance. Okay. The optimized model only, and I'd like to get the optimized model with chop avoidance running. I don't know if I'll be able to do. I'm not sure I can get it to run. In the past, I've had trouble getting a fourth CRTride instance to run. Okay, so that's what's set up, and then assuming coming out of next week, we'll have to make a decision on kind of sort of where we're at. If one of these is obvious, then I'll start building models that I can do testing on to get a better statistically valid result than just watching it live. And then we'll go from there. All right. As it stands, so what I would expect is not next week, not next weekend, but the weekend after to release this. And what I'll do is I'm going to build this piece this weekend so that you can easily turn chop avoidance off or on. Okay. And in fact, yeah, but I have to burn that in, so I need a week of testing. So I'm gonna do this so that you can, the chop avoidance here can be turned off and on. And then when you think about it, what model you use is also an option. So from a releasing the system perspective, once I have this piece working, there's no reason not to just put it out there and let you guys start using it as long as you've got the training. Okay. It does require a server change, and it does require a DLL change. So that's the testing that's got to occur. So I guess the more I think about it, in theory, if I can get the programmer to fix his piece this weekend, then the server I own, so I can get the server changed. So it's possible even next weekend. That would be the stretch goal. Otherwise, the following weekend for sure. Okay. Can you tell us the studies to add just to watch the market perform at the volume? Yeah, it's really easy, Larry. The study is volume, value, area lines. Okay, and it's going to draw. I'll show you the settings in a minute. It's going to draw that line, and that line. Okay. So you can watch the market. You can put the volume by price on as well, which will give you a profile. That's quite a bit more complicated endeavor. All right, that's a really complex study. So you might want to take baby steps and just look at the volume value area lines first. The piece that you need to make this work is what you're seeing here. All right, this is why you can't do it yourself. You got to have me, because this is the low volume node at this point in time, right here. There's no way to do that in Sierra Chart. Sierra Chart will track the low volume nodes, but only for the bar that's at the right edge of the screen. So these yellow lines are low volume nodes, but only for this point in time right here. That's it. And so really what we're talking about here is this study here that's drawing this line. This is what's called the developing value area low. These are the developing low volume nodes. This is what these are. Just very specific to what I need, because I only care about the ones closest to price. That's a custom study that is right. Where is it? Well, it's here. TRT low volume nodes. You don't have that yet. Okay, so you have to have this to make this work, or it just won't work. Because you don't know what the low volume nodes are historically. You only know what the low volume is right now. That's the big problem. So this took a lot of effort to write and debug and get it correct. So that is part of the DLL change. The other part is that we have to tell the system that I want to only make predictions at certain areas, and when you make those predictions, use the rational trader behaviors. Okay, so those are the two things that aren't tested yet. All right, so then I didn't show you those. The volume value area lines. Here's the settings. Draw developing value area lines. I think that defaults to no. You want it to be yes. Okay. Ticks per volume bar is 1. Time period type is days, and 1 day. Okay. So give me the volume profile for the current day. This is going to use the chart settings, the times that are in the chart settings. So if those times are correct, then you'll get the right lines. 0.7 is the value area percentage. Okay, so when I say chart settings, what I mean is it's going to use these times. You must have use evening session checked. So it'll start building the profile at 13:15:01 the previous day, and it'll stop at 13:15:00 today. All right, that's what you want. You start building the profile when the electronic session opens, and then build it all night, and then when you come in, you've got something to work with right at 6:30, and then off you go. Yeah, just use whatever time. Your chart settings are probably set up correctly. I just wanted to make sure you understood that. So as long as this chart setting is set correctly for your time zone, you can see it down here, right? Then it'll be right, because you're telling it by default it uses these times. Okay, it should just work as long as if you're looking at your chart and you know when this market opens and you've defined that, it'll just work. If you try to set it up with the volume by price, that's a much more complex thing, and it lets you do all sorts of fancy things that are overwhelming in their complexity. Okay, so that's it for today. That's all I have. I have a lot to do here because I need one of my the reason this wasn't already all laid out nicely in normal format for you guys for this talk today was that I was testing the changes to the DLL that to the study that tell the system to use the rational trader behaviors at the user-defined location, and it's not working. It works. It's been working because I customized the server to do it, but to make it generic for everybody, we have to change this study to add this option here, and it's not working correctly. So I got to get the programmer to fix that. I'd like that. If I can get that fixed in time and get the server updated in time, then starting Monday I can get a full week of testing in. If I can do that, then I can release next week. I don't have a problem with that. But we have to get it. We have to get those. It's clear it's not working correctly right now, so we got to get that fixed. Okay. Any last questions before we hang it up for the day? Larry, I'm very excited about this. This is very interesting stuff here. Okay. Thank you then. I will see you all on Monday.